for the markets, we're holding out quite okay. The fact that this morning also the SGX Nifty is indicating a stable start, and we've got now that 17,800 print inside going by the futures. 17,722 is how we shut shop yesterday, ambled around in a narrow band, but largely spent the better part of yesterday's trading session in the green. So clearly, it's a sign of return of stability in the markets at least.
So actually the bearish narrative in the market is missing.
Yeah.
Markets are not looking clumsy. Markets are not looking oversold. There was this whole lack of participation which I think was evident in the market because small cap stocks were falling on a daily basis. Nifty was looking jammed. So from that standpoint, yes, last couple of trading sessions have really changed the market mood, and they've really directionally made the market, they've changed the market appeal, so to speak. And I think we've come up a long way. It's been a powerful rally for Nifty and the Bank Nifty, almost 700 points plus for the Nifty, more than 1500 points plus for the Bank Nifty. So it's been a sizable and a solid comeback. Out of the concerns which were really dragging the markets down, some of those concerns are automatically getting addressed on the global news front, on the valuation front, and on the flow front. The way I look at the market is that markets were oversold. Now they've come to neutral territory. But looking at the positioning of the market, which is still light, and FIs have just come back, and retail participation just about started, I think that directionally we could be in for a strong April. Earnings season, everybody knows that IT will be bad and banks would be good. So I think markets pretty much are pricing the bad news in, and they are not discounting the good news up. So I'm more optimistic than cautious in this market. I think we could be in for a strong April, and they're going to take it from there.
Yeah, in fact, in the month of April so far, you've already seen FII buying of 2,800 odd crore rupees, and the kind of momentum pickup as well that we've seen. I mean, not so long ago, on March 29th, is when we made that near-term low, that of 16,951. From there, we've seen a 4.5% move on the index alone. Now we're at that 17,700 print. So not looking all that bad. And the banks have really had a key and pivotal role here, because if you were to look at the Nifty Bank performance as well from the recent lows, that of March 29, from there the Nifty Bank as well has perked up about 4.5%. So not looking bad, and short covering clearly continues if you were to just look at the F&O trend.
So what is the data like? Let's say at the beginning of before the rally actually started, the FI positioning in the market was 90%, almost they were short or they were hedged. Now that number has reduced from 90 to 28, which means FIs are covering the shorts. On the retail front also, if you look at the data is clearly talking about a constructive long build-up which has happened. In any market, when you are coming out of a prolonged downturn, the first leg of the uptick is always short covering, and then that would be followed by long participation till the time markets do not reach the overbought zone. My sense is that we've just come out of the short covering zone to a neutral zone, and the participation has not started. And looking at the contours both locally and globally there are no concerns. Locally things are looking stable. You could actually see the market extending itself, because markets in the short term are always about sentiment. And the sentiment, the pendulum of sentiment, which was all about short selling and hedging, has to move from a oversold market to an overbought market, and I don't think we are there yet. Let the market participation go higher, and let there be a little bit of froth built up in the market. That is the time we will come out and call the top of the market. But right now, I don't think we are there yet. What may make the market nervous is the US jobs data. That's a separate, that's a completely different kettle of fish. But if you analyze the technical, it's like a pendulum. It has to start from here, it has to go all the way up here. So this was oversold. It has become neutral. Now it has to become overbought. I think we're the center right now.
Okay, neutral right now for the markets. And just to check in on the global screen, and you have a little bit of a mixed close coming in from the US markets, clearly watching out for that inflation data as well coming out of the US. Asian markets as well, the Nikkei and the Australian markets along with Shanghai in the green. But Kospi in Hong Kong is tempered. You've got Bitcoin as well, which continues its up move, and the Treasury yield hovering around the 3.4% mark. The SGX Nifty around the flattish mark as we speak, indicating that it could be a muted start around 17,790 levels. But the other big talking point today is going to be TCS and what the street is expecting as it kick-starts the earnings in Q4. It's expected to lead growth in the Tier 1 IT. There could be some deal conversion delays or revenue conversion due to the macro slowdown, so a delay in revenue conversion. But the large deal wins is really going to keep the deal momentum alive and Nikunj above that $8 billion mark.
I want to look, the stock has fallen and it's almost been a straight line fall for TCS. Let's first look at the 1 year chart for TCS and then we'll superimpose it with the YTD chart. And this chart perhaps tells you the story. That's TCS for you in last 52 weeks. It's down 12%. Similarly, if you look at TCS, even though it has managed to outperform the market this year, it in a sense has been a stock which is been slightly numb. It has not really fallen like what other IT stocks have fallen. So the challenge for TCS is that it's an expensive stock and markets have enjoyed certain degree of comfort from TCS. The problem with TCS is that I was looking at data a couple of days ago. 8 out of last 10 quarters, TCS has missed the earnings mark. If we get in one more quarter of earnings miss mark, then will markets lose their patience for TCS? And the premium pricing what TCS is enjoying in terms of P multiple, which is 20 plus by the way, will that get challenged? Because TCS gives you this comfort factor, but they've been missing the earning estimate. The growth in a sense is contracting now. Up until now, they've maintained the best margins in the industry. But if that gets challenged, then I guess significant downside could be seen in the short term. And before I throw it back, let's also establish Infosys. You cannot look at TCS in isolation. You have to look at what Infosys has done. I'm not even walking towards Wipro and Tech Mahindra. They've got different challenges and different triggers. But let's look at Infosys. The 52-week chart, there you go. That's IT index for you. Now, we want to compare TCS and Infosys. So if you want to compare TCS and Infosys, you actually would see that TCS has actually outperformed Infosys despite not keeping up to the analyst estimates. So if there is one more quarter of missed estimate, will markets lose their patience? That's the point.
Yeah.